and welcome back to another video series of real estate analysis and real estate investments. Again, this is part of a video series of how you can get started investing in real estate with FHA loans with as little as 3.5% down. If you don't know who I am by now, my name is Maxim Cruz. I am a real estate broker as well as a real estate investor. And back in 2011, my wife and I, we actually decided to postpone our wedding in order to buy a multifamily income producing property and, live free, pay off some of our student loans, generate cash flow, all that kind of good stuff. Also, this video is part of a special series for Denzel Rodriguez and all of the Kingdom citizens. If you don't know who Denzel is, there's a link to his YouTube channel down below. You can find all of his contact information. He talks specifically about velocity banking. When I came across Denzel, we used and started learning about velocity banking. He made a plan for us in order how we can pay off our real estate much quicker. So it is definitely very powerful when you're looking at cash flow and when you're looking at paying off any sort of debt without necessarily generating more income. So again, this is all about FHA investing, but also, as you see, I have it broken down in 3 series: cash investments, leveraged investments using conventional loans, and owner-occupied FHA loans. There should be a link somewhere here or down in the description for our other videos regarding some of the terminology and just some of the basics that I'm gonna go and lay out here. So let's get right into it. Just before we start, again, I am a licensed real estate broker. For those purposes, this video is for information purposes only. Any things that you see here is not investment advice. You always want to check with your licensed investment professionals, whether they're certified financial planners or other sort of investment professionals, in order to get advice. So this is for information purposes only. I don't want to lose my real estate license because I'm doing these type of analysis. So again, this is for informational purposes only. Now that we got all of that good stuff out of the way, let's take a look at what we're looking here. So if you remember last time, I did have this sheet, which is the FHA borrowing limits. So what we see here is Pompano Beach. There is a little discrepancy here, which I'll go at the end of this video, but stay tuned for me here. So up to a 4-family in Pompano Beach, it is $718,000, and a 1-family, the maximum limit is $373,000, and I'll show you why that's important as we move on a little bit in this video. The address here, I always make it clear: 901 Southwest 13th Street, Pompano Beach, Florida 33060. MLS number R like Robert 105-60088. One interesting fact here is I actually pulled up this property as part of this video series. Today is January 12th. I did this report. Let me see here. I did this report initially on January 2nd. So 10 days ago, this property was listed at $289. As of right now, over the last 10 days, they have brought the value down, the listing price, to $279,000. So let me read you a quick description. It says 5-unit rental property. There's 5 studios, 5 bathrooms, with $3,550 month in revenue. That number is actually incorrect because I checked it here. $6,050.51 in expenses. This property is a cash cow. Units have been upgraded with new bathrooms, flooring, new roof in 2014, new central AC 2016, tankless water heaters in 2014, and a laundry area. Double lot included with a lot of potential. Must-see property, offers you a lot of space to, park your RV, boat, business vehicle, truck, or just simple rent the extra space, etc., etc. So let's get into the numbers. The real estate broker here, and I have this covered here because this is very important when we get a little bit down the road in this video, but The real estate broker provided some numbers here, but I ran those numbers on our deal analyzer. Again, if you want to get this real estate property deal analyzer, there's a description in the link below. It's a simple Google spreadsheet. You don't have to enter your email address. Again, if you use the deal analyzer and you buy a deal and you make a bunch of money, just give me a call and we'll go, I don't know, have a nice lunch over Smith at Walensky's in Miami Beach or whatever. So again, you don't have to enter your email address to get all those annoying emails that never stop junking in your mailbox. So let's get right into it. When I did the numbers on this unit, I'm going to do everything as is right now. Now, one huge discrepancy, which I'm going to talk about a little bit further down the video, is the tax record shows this as a single family home. And this is where I'm going to show you the value of a real estate broker. Again, we have connections in all 52 states. So if you are looking for a real estate broker in your area, I would be more than happy to refer you to one that has this sort of investment experience that can help you look for these type of properties. So let's get into it. 5 studios currently rented at $750 each. When we do the math, it's $750 times 5 times 12 gives us $45,000 of income, not $42,000 as it was disclosed by the property description here. So let's just go down and look at some of these expenses. Again, there's 3 categories. There's cash investment. So if you had $279,000 in your bank account right now, what would it look like? Then there's a leveraged investment using a conventional loan. So if you had 20% down payment of the $279,000, these is what the numbers would look like, and the owner occupied using 3.5%. So let's go through the cash scenario first. Again, the income here that I came up with, remember, I said it's $45,000 for all those 5 units. The income here that I put in our deal analyzer is actually $44,250. And the reason I did that is because it is 5 units, and I know that the cash investor putting their money in there is not going to manage this. I want to make sure I appropriate something for vacancy. Now, typically, there are investors that will use a 10%, a 20% vacancy, even 5% if they're a little bit more aggressive. In this unit, what I said, okay, well, if there was in a 12-month period, if I'm doing a 1-year lease, if at least one time a year those leases move out and I have to renew the lease and there's a 1-month vacancy, I'm going to figure 1 unit is going to be empty for 1 month. So that's where I took the $45,000, subtracted one of the units, $750 in rent, which gave me $44,250. So this right here, just so you could get your investor cap on and start to learn some of the terminology, this is essentially what's called the effective gross income. That is where you take your gross income and you subtract your vacancy. So in the investment world, real estate specifically, we call that the effective gross income, your income minus your vacancy, okay? Next, we get into all of the expenses. Now, the description here, it said that the total expenses was $6,050.51. And I'm going to show you what I came up with, which my number is, again, slightly a little bit different. I'm saying, okay, the taxes I got off the tax card, $3,129. Insurance was factoring in about $3,500. Water and sewer is about $1,000. I'm figuring $50 per unit per quarter, so that's $250 for the building every 4 months. Sorry, every 3 months. So that gives me $1,000. Then I have management. In this unit, there's 5 units in there, so I'm figuring I'm going to have a property management company. So I'm figuring 10% of the gross income, which would be $425 is my management fee. Then because it is showing as a 1 property building, I'm figuring there's only 1 meter, so 1 meter socket. So in this scenario, probably the landlord or the owner rents everything included in this, including electricity. So that's why I figure, okay, about $50 a month, since they're smaller studios. We figure, okay, $3,000 for the year at $50 a month times the 5 units, $3,000 for electrical expenses. And the repairs, again, this number might be a little bit high, $50 per unit on a monthly basis gives me a total of $3,000. So the real estate broker had estimated $6,000 of annual expenses. I'm getting an expense of $18,054. And again, depending on what your investment criteria is and what your experience is, these numbers you could start to play around with depending on what you're looking for, or you can get estimates on these numbers from your local professionals. You can call and say, hey, Mr. Seller, can you provide me, if electric is included, can you provide me with the last 3 months of electrical statements so I can do this? Water and sewer, what is the water and sewer? Management companies, call the management companies and find out what they are. Repairs, hey, Mr. Seller, I know you said that there was a bunch of things done in 2014, 2016. Can you provide me in the last 24 months, what are the typical repairs? Clogged toilets, kid playing baseball outside, broke the window, tenants moving furniture around, knocked down the ceiling fan. What are the things that are expenses that are going in there that you're figuring, right? So based on all of this, on a cash investment, our NOI, the net operating income, which is your income, so again, in this scenario is our gross effective income minus our expenses, gives us an NOI, net operating income, of $26,196. Based on that, we get a cap rate at the $279,000 price. Again, remember, cap rate is just the relationship between our NOI, net operating income, and our purchase price, the cash price. So that gives us a cap rate of 9.39%. Right now in South Florida, that number is unheard of. And again, this is a very particular unit, which, these numbers, this is what it comes out to. For our leveraged investment, now let's look into some financing. Here we have a scenario, $279,000. Our interest rate is 4%. The term is 30 years. 20% down, we're looking at a down payment of $55,800. Our principal and interest on annual basis on that. Sorry, that's not the number I meant to put on there. So our principal and interest is $1,065 per month. So let me just erase that. I apologize for having my back on you. $1,065.59. So there you go. That just shows you I'm human and I do make mistakes as well. So that number is $1,065. So again, we have our expenses here, which are pretty much the same as this number. Minus the financing. In this case, if you take $1,065.59 multiplied by 12, that will give you $12,787.09. Bring in our NOI, which our income minus our expenses is $13,408.91. In this scenario, again, we are looking at what's called a cash on cash return. Remember, you put in a down payment of $51,000. You take the NOI, $13,408, divide that by the $55,800, gives you a whopping cash on cash of 24.03%. Okay, this number typically in a syndication deal, typically the syndicators are looking between 10 and a 15% cash on cash return. This number of 24.03% is very, very, very rare to come by, unless it is like this, that you're buying 5 single studios or you're buying a value add opportunity. Which again, you can go back and look at my other videos where I do provide some examples of some value add opportunity. Now let's look at owner occupied. And again, if you are owner occupied, if you're paying rent right now, you're going to be very excited about this column. So again, here, because you are living in one of the studios, remember, FHA loans is assuming that you are an owner occupied on the property. So you don't have all the 5 units rented out, you only have 4. So you take $750 times the 4 units times the 12 months, and remember, I'm leaving 1 month vacant, so that's why I subtract $750 for 1 month. That gives us, on an annual basis, $35,250 of income. This is our gross effective income. The expenses here, now I still am doing a management fee because I figure, okay, you're going to have 4 units to manage, so let's give it off to a property manager since maybe you're just a starting up investor so it can get managed efficiently. Now your management fee is 10% of this income, the $35,000. So you can see this number here is about $900 less than that. So that's where once we add up all of our expenses, $17,154. Our PMI, we are doing a 3.5% down payment, which means our down payment is $9,765. And that scenario, we have a PMI, which is our principal mortgage interest. So our principal plus interest plus our PMI is $1,509.73 every single month. Multiply that times 12 months, we get the financing for the year, which is also called our debt annual service, $18,116.58. Our NOI for the year is negative $20.78. So that means that this owner occupied living at this property, okay, putting down $9,765 for the whole entire year is going to pay out of pocket $20.70 on a monthly basis, okay, to live in this apartment. This person is paying $1.73 to live in this unit. So again, this is very, very, very rare certainly that this happens, but this is actually how my wife and I were able to get into our, income producing property, our 4-unit, and essentially live rent free, right? Okay, so now let me get into this scenario, which would be my offer. And once I explain all of this stuff on the last part of the video, I'm going to mention to you why I came up with this price and what that's based off. So again, at the $255,000, rents are exactly the same. So all of these expenses that you are seeing right here are essentially staying the same. This is where we get our NOI is still the same, $26,196, but because our purchase price is $255,000, our cap rate becomes 10.27%. In a leverage scenario where we're taking 20% down payment, again, our NOI here is a little bit less, $14,508.87. Actually, it's more, and the reason that the NOI here of $14,508, the reason that it's more is because our financing, okay? At the $255,000, as you see here, our 20% down is $51,000, and our principal and interest is $973.93. So once we have all of those expenses, which again we have done in our deal analyzer, and they're not on the board, you can download the deal analyzer completely for free. No subscription email needed, none of that stuff. So this is where we get $14,508. In this scenario, we are doing what's called a cash-on-cash return, because we did put in only $51,000, and our cash-on-cash return is 28.54%. So you can see it's 4% higher than this here. Now, for the owner-occupieds, and again, my Kingdom citizens that are watching this, you are going to be blown away on what happens here. So I'm actually going to take this off and go down one by one. In this scenario, our NOI is $2,768.03 positive, okay? So that means we are making money from this deal at this price because our financing is lower, okay? That is the reason why. Our down payment is $8,925, which means that the monthly income, okay, on this unit as an owner-occupied, every single month, you are putting $230.67 in your pocket. Now, your monthly personal rent expense for living here is $0. What does that mean? That means if I just graduated college or if I just started a job, this is exactly what I would do. I would get into here, which is not going to, I don't have to pay any rent. I can work my job. I can do all of that stuff. And at the same time, I have additional monthly cash flow. So before to this, you were paying $750 to live in the studio. Now you are being paid $230.67 every single month, plus the $750 that you're saving on top of that. That gives you monthly cash flow for all of my Kingdom citizens. And again, if you don't know what I'm talking about cash flow, just go and look at Denzel's channel. Check out Velocity Banking, because this is huge right here, okay? $980.67 every single month of additional cash flow. And this is why I absolutely love real estate, okay? Now, let me get to the disclosures and part of this thing that might be an issue that comes up, okay? The tax record, and again, this is the true value that I believe real estate professionals have to provide. So again, the tax record right here that I have pulled up actually shows this as a single family. So me as an investor, okay, what I would do is I would say, okay, I'm actually buying a single family home. And again, this is where the value of your real estate broker is huge, because what did I do, okay? I went and checked out the previous time it sold. And this right here, it sold for $157,500 back on April 17th, 2017. Not only that, but I went back and pulled up all of the closing history, and I saw exactly when it was sold. And the issue that I found was this, okay? Check out this property description. Single family home operating as a non-conforming 5-unit rental property. So this broker here is actually telling you, hey, you're buying a single family home, it's non-conforming, it's being used as 5 units. You know, do your own diligence, take your own risk, make sure you know what you are doing here. And this is why it's very important. And in the previous video that I made, I actually talk about this, okay? Where you need to go to your city, you need to go to your tax assessor and find out, hey, can I legally use this as a 5-unit? Maybe you are already grandfathered in and they allow you to continue using it as a 5-unit. Or maybe you buy it and the building inspector shows up at your door the next day and say, hey, you have 4 illegal apartments here. We are, you need to either bring these up to code, or you are in violation of the city and we are going to fine you for every single day that you have tenants here. So this is the risk and this is the potential, okay? Factor number 2, when it comes to financing, okay, the bank. When the bank is the one that is really taking the risk, because they are putting the majority of their money. The bank might also, the underwriting department in the bank might also say, hey, this is an issue for us because we are essentially investing into a unit that might have some issues. So based on that, number 1, we might not give you a loan, so your loan might drop off. So you might want, depending on the loan mortgage originator that you're working with, your bank, your loan officer, you want to make sure and check in with them. Hey, look, can you check out this property description? Here's the copy of the taxes. What do you think? Is there any chance that the bank is going to deny me on this loan because of these issues? So the bank might not give you financing for that. And then the other factor is if they truly say, hey, we are going to consider this as a 5-unit, the FHA, which is essentially the private mortgage insurance, they might not write off on the loan. They might not insure that loan, saying, hey, it's being used as a 5-unit. We only do a maximum up to 4 units. So, sorry, but we can't insure this loan, which again is going to bring you into other type of investments. Other type of loans. So again, there's multiple factors. As you see here, I mean, the numbers look amazing. I'm actually going to be looking at this property myself. Because even if we buy this using 20% down payment, this number is looking really good. But again, I have to figure out with the city to make sure I'm not going to get in trouble once I own it on what happens. And the other thing I wanted to share with you here is that, for example, it was placed on the market by a real estate agent back. Let me see here. So this listing agent placed it on September 10, 2019, which is actually my birthday. So if you want to send me a birthday gift, you could do that. Previous to that, it was listed with another agent on May 27, 2019. Then previous to that, it was actually listed on July 24th, 2018, and it didn't sell and they canceled that listing. Previous to that, the sold listing was listed on January 31st, 2017 and sold on April 21st, 2017. And then previous to that, it sold, it was listed June 24, 2013 and sold June 30th, 2014. So almost a year out. My question on this is, why is this property turning over every 3 years, or what it seems like historically, every 3 years they want to sell? Is there an issue with management? Is there an issue with the city? Are the tenants giving you headaches because there's 5, studios? Is the vacancy number much higher? Is it actually 20 or 30 or 40% vacancy rate? What is going on here? So again, that's just another risk that you need to factor when you are looking at these type of deals. So again, the most powerful thing that I really took away from this video is just this number right here. And again, I experienced this. My wife and I, we lived this essentially, where you're not paying rent, so you're rent free. So you're using that number as additional cash flow. And then on top of that, based on what your tenants are paying every single month, minus your expenses, you have money left over. So that's additional cash flow that you are putting into the bank or that you are using to leverage and pay off any sort of debt. So get excited about investing in real estate. Again, I am going to be bringing on my wife soon on a video series that we're going to do specifically talking about taxes. And we actually sat down and analyzed one of our investments, which is a 2-unit family, a 2-family property, a 2-unit property. And I'm going to show you exactly how those numbers worked out. And we were actually looking into possibly selling it in order to buy another sort of investment, doing what's called a 1031 exchange. So again, we're going to be talking more and more regarding real estate investing and again, how you can get started. I know a lot of people get intimidated because they see, I'm a huge fan of Grant Cardone's. I understand thinking bigger. I understand analyzing all that stuff. But how do you get started? What if you only can manage on saving up $6,000-$7,000 for the year? Yes, you need to focus on income. How can you generate more income? But once you have more income, how can you increase your personal cash flow, which is one of my first videos that I did on why buy versus rent because of this personal cash flow issues. And then, in the future, start doing 1031 exchanges and increasing and doing bigger deals, And again, this is what we are here for, to bring you this sort of value. So again, go get your deal analyzer below. It's a Google spreadsheet, and you can play around with that and put in your own numbers or look at your own deals. If you have a deal that you would like for me to analyze, we'd be more than happy to do so. If you don't want to send me the property address or the MLS number, that is perfectly fine. The only thing we need, again, is you need to know what your purchase price is. You need to know the number of units and what the rentals are, so that will give you income. And then you need to know what these expenses. So income, expenses, and your purchase price or your offer price on what you're planning to offer on these units, then we can actually do this type of deal analysis. And as you saw here, the real estate broker on his description put in $6,000 in expenses. We came up with $18,000, and then I explained to you what all these numbers meant. So again, I'll be more than happy to analyze your deal looking at sort of these type of scenarios. So with all that being said, go and get your deal analyzer. Go and check out Denzel's channel about velocity banking. If you're Kingdom citizens, thank you for watching. Hopefully you can get excited as I am about this additional cash flow on a monthly basis. So with all that, have an awesome day, and I'll see you on the next video.